Well, Happy New Year. Good morning, good afternoon. How's everybody doing? No way. Hello, Simone. It's a name I haven't seen for a while. Hope you're well. Hey, Kevin. Hello, Erica. What's up, Stephanie? Thank you, Brenda. You too. Hopefully it's off to a good start. Get this thing going here real quick. That's awesome. Love it. I had to give me a fresh cup of coffee. That's why I was 30 seconds late. It's still morning time out here on the West Coast. So, hello, Helen. Another Kevin. Lots of you guys here this morning. Awesome. Well, welcome out to Trading Coach's Playbook. Let me brighten the studio a little bit. Excuses. What excuses? I'm already in trouble, Brenda? Why? Well, the kitty's not there. Oh, coffee. Yeah. The machine was slow. I don't know why. Let's get this out of the way. I'm not a registered broker dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading here. So, operator, all I do is push a button. Fill it with water, put beans in it. Fortunately, I remembered to roast some beans the other day, so I've got it fresh, which is nice. So, all right, so here's what's coming up in the next, this month, it looks like. Inner Circle, January 8th and 22nd, both at 7 p.m. And then the quarterly ones are January 19th and 20th at 10 a.m. Mastermind groups January 9th and the 16th at 8 p.m. Eastern time. Everything's in Eastern time, right? So I have to get used to adjusting the time all the time, but it's been a long time I've been doing it, so it's pretty easy. But Wealth of Spreads January 10th, Trading You January 18th. And Monster Market Movers is the 24th. And then the free online workshop Power Hour every Monday at noon Eastern time. Oh, the 15th is being moved to the 16th. So it looks like that'll be Tuesday. Is that a holiday? Seems like it is. The market's closed or something like that. There's at least one this month, I think. Trading Coach's Playbook, this one right here every Friday at noon Eastern time. Crush it in 2 hours, January 11th or 9th, 11th, and 17th. And then Crush It with Rob in 2024. The 24th, 25th, and 29th. Okay, that's what I was thinking. Thanks, Trip. Didn't it used to be called President's Day? Or is that in February? I don't know. I can't keep track of them. There's holidays for every day now. Like every single day, there's somebody needs to feel special. Whoops. Everything is, I think it's out of hand myself, but President's Day, okay. I get them mixed up. I should know that, but hey, Jennifer. Yeah, multiple. Exactly true. It's like today's taco day. Wait a minute. I thought that's every Tuesday. I mean, it's take care of your yard day. It's just crazy. I think it's nuts, but anyway. I love taco day too. Every Tuesday. No, actually, I don't. I don't eat out that much. So power option plays are every Tuesday and Saturday. Covered call explore with Trip on Thursday. And then E-mini Think Tank is Monday, Wednesday, and Thursday. So and then you can find us on all the social media stuff, all the different places. I'm not on many of them. I'm not a huge fan of social media. I got on Facebook years ago only for business purposes, and then everybody started finding me. So, but if we don't know each other, if you haven't seen my stuff, Patterns and Flash is a training tool I created. Holy cow, almost 14 years ago now. Updated, of course, but over the years. But that's the beauty of technical analysis is it's pretty static. Once you learn to read the charts, it doesn't change much. I mean, the technicals are the technicals. They are what they are. So once you develop the skill and you learn it, you don't have to keep relearning it, right? And whatever you do for a living, if you have, if you're in technology, pretty much anything you're in, you have a learning curve. You have to keep learning new stuff because things keep changing. One of the beauties of trading in the market, at least, is technical analysis or even fundamental analysis. The bulk of the type of analysis we do really doesn't change much at all. So once you develop the skill, you don't have to keep going back to new classes. I mean, it's a skill you have to constantly upgrade because you never, ever fully master it, I don't think. There you go, Brenda. Hope you're paying attention. I knew she'd show up at some point. as long as she doesn't drink my water. But yeah, it's trading is a lifelong journey. It's something that you're not just going to master it in 1 or 2 years and then be done. You will constantly improve. There is, when you first get started, right, there's a massive learning curve. But once you get that kind of parabolic move where you get to where you've learned most of it, then you're only getting little nuggets. You know, I know there's some of you here that have been here for a long time that you're probably not going to get much out of today except for a nugget or two. But it's interesting how sometimes hearing from different people from different sources or different ways, even though it's the same information at the core, it lands on you differently. And sometimes you've gotten to a different spot from a learning experience or a live experience, right? You get experience, and all of a sudden you see things a little bit differently. So, and it's funny that the older I get, the more I realize how true that is. It's not only true, but it gets more profound, if you will. So it's like, you don't learn as much, but I don't know where I'm sort of trying to say with that, but I lost my train of thought. So anyway, if you're new, even if you're not new, if you haven't had Patterns in Flash, I would suggest getting it. There's about 8 hours of video in there. It's all on demand, right? It's all pre-recorded. It's all there. There's flashcards, which train your eyes to see the patterns on the right side of the chart, which is critical. So true, Kevin, mostly true. I'm going to try not to be OCD. I would add one word to that. I would say applied knowledge. I think Einstein, the guy behind me, you guys can't see it, but I got a big picture there of Einstein. You can see the base of it. It's a picture of Einstein. He said, there's a lot of well-educated derelicts in the world. I think it was him. I remember seeing that quote years ago. So knowledge and education is only good if you apply it, and you apply it properly. So it's, again, I'm trying not to be OCD and parse things, but at the same time, sometimes there's those little tiny differences can make a big difference. So I'm not, don't get taken the wrong way. I wasn't being picky. I was being picky, but sometimes it's necessary. So, and I figured that's what you meant. Most of the time it's like that, but it's like we used to say, you know, practice makes perfect. Well, not really. Practice makes improvement. None of us are perfect. I'm close. I made a mistake once, but anyway, moving on. Easy, Brenda. I'll find some squirrels. So Weekly Whispers is one that we launched last year at this time, first part of last year. Basically, I do a full, basically about a 1 hour video every week with my trading candidates. So I'm already doing all my research. Every Thursday, I go through and look through charts, look for patterns, look for trading opportunities. And I usually have about 20 or 30 every week. And so I started doing that last year and recording basically an hour session that you'll get Friday, usually in the morning time, sometime before noon, Western time at least. I usually get the email around, I think 9:30, 10:30, somewhere in there, saying that it's uploaded. But it's an hour, and I go over the macro picture, we look at the big picture, we look at news that's coming up, what might affect the markets, and then candidates. I usually go back and review, and I made some improvements for this year over last year. We're going to touch on looking a little bit at that today, as far as the topic we're talking about. So, and then small accounts, big returns. There's a pre-recorded class that I did, I don't know, a couple years ago. If you start with a smaller account, then there are some little tweaks, things you can do to improve your chances of long-term success and growing that to a bigger account. And that's basically what that covers. So there is the topic today. Perfect practice makes perfect. I like that. But as a guy who questions things, can you practice perfectly if you're not perfect, though? I'm just saying. I told you I was OCD, right? But no, I mean, they're all good sayings, no matter what. So, and it's good to have that mindset. And that's kind of what we're talking about today. And that's a lot of what I like to talk about, because that's the challenge of trading, right? The technical analysis, the learning, the education, the knowledge, if you will. The knowledge is something that, for the most part, the vast majority of it is static. It doesn't change, right? Technical analysis done in the 1920s or 1930s is no different than technical analysis today, except for the fact that we have more powerful machines that can do it faster and easier. But the reality is that what creates the patterns in the charts, the underlying core source of that is human emotion. Is people making decisions to buy or sell a stock based on how they feel about it. There's the old saying, since we're on a bunch of mantras, that earnings drives the market or news drives the market. And that's only partially true. It's not the news or the earnings because those are static pieces of data, right? It is the emotional reaction to the news. It's the emotional reaction to the earnings. It's how people feel about the news that creates the reaction. At the core of the market is driven by emotions. And as human beings, we all have emotions, some stronger than others, right? And we use those emotions to make decisions. And we have to recognize that. It's important because it's there. You're not going to trade without emotion. Whenever somebody says, oh, learn to trade without emotion, I run. Because it's not possible. It's like saying live without emotion. Just don't feel anything ever. Don't get mad at your spouse or your neighbor. It's just impossible. It's impossible to live without emotion. So instead of trying to avoid something that isn't possible, why don't we learn to embrace something and use it to our advantage? You can literally use your own emotions as an indicator. In fact, I think it's probably the most important indicator in the world when you're looking at a chart, right? And maybe I need to change because anytime somebody says, what's the most important indicator? Well, number one is price. Number two is price. Number three is price. Number four is price. Number five is price. Price is the most important indicator. MACD, Stokes, all that stuff, those are all derivatives. They're mathematical calculations of derivatives of the past price movement. The most pure, accurate, timely source of information is the price. But you can also learn to recognize when you feel a certain way, if you feel nervous or anxious, whatever, then you learn to adapt, right? And that's important that's an important skill to learn. So exactly, Steve. If you practice wrong, you'll never improve. So, but kind of the topic of today is, and I like this saying, I accidentally used it twice, but life in front of you is far more important than life behind you, right? You ever pay attention and notice the difference in size between the windshield and the mirror? Well, you technically should have 3 mirrors, but the mirrors are all super small. The windshield is huge. And that's because we're supposed to be focused where we're going, not where we were. The mirrors are important because we have to know what's back there. But 95% of it is all windshield, right? So we need to be focused. Otherwise, we have a problem. Mirrors were designed for short-term use, not for long-term, right? If you drive in the rearview mirror, what's going to happen? You're going to crash, right? It's just reality. And unfortunately, when it comes to trading, there's many of us that get stuck driving in the rearview mirror instead of looking out the windshield and realizing that that rearview mirror is there for a purpose, but it's only to be used temporarily for a very short term. And then you get focused back on where you're going. And the goal should be, and this is something that took me a long time to learn. Okay, you've probably all heard the term preservation of capital. If you blow your account up, you can't trade. So it's important to use stops and make sure that you have protections in place when the market doesn't do what you think it's going to do. One of the hardest things for us to do is shed this idea that somehow we can know what's going to happen, or we're going to be right, or being right is even important. It's really not. I'll show you in a minute. And it's a little bit, it's a little hard to show, but at the same time, it is reality. So the goal should be keep your tank full, right? Keep the account filled with cash as much as you have. Whatever the number doesn't matter, whatever you work with. If you have $1,000, don't lose it all. If you lose $300 or $400, you can recover from that. Right? You got $10,000, you can recover from a $3,000 or $4,000 loss. You lose $8,000, it's really hard, right? So one of the keys to long-term success in the market is preservation of capital. You've got to learn to make sure that you always have something there to work with. Because I don't know, and I've blown up accounts before a couple of times in the past. And so I know what it's like. It's not fun. And it's hard to regroup and come back. It's the biggest hard part is mentally, right? It's overcoming the mindset part, which is really kind of what this is all about. And that's why I said in the beginning, mindset is the biggest thing to trading. You can learn the technicals. You can learn the fundamentals. If you trade, if you're doing longer term buy and hold fundamental type of trading or investing, whatever you call it, those things are for the most part static. The challenge is what's between your ears. That is where the battle is. It's not between you and the market or you and the market maker, which I can't stand hearing that. It's like market makers are just middlemen. They're no different than Walmart. They buy something at wholesale, they put it on the shelf, they mark it up, and they take a little profit on it. That's what everybody else does. That's what market makers do. They're not after you. They don't care about our little, 1 lot or 10 lot trades. They really don't. Now, if they have institutional traders that are doing, 1,000 lots, that's different. They might be paying attention to that, but that's not us, right? I mean, I guess maybe some of you could be that, but the market makers don't care about us little people. Where was I going with that? So getting the mindset straight is the biggest thing. And really one thing that in the last 2 or 3 months, it's something that it hit me a while back, 3 or 4 months ago. I remember thinking, it's not, trading isn't necessarily about being right. All the biggest thing is, how do you bounce back? How do you bounce back from defeat? That's the mindset part that's the hardest, is when you take a beating, whether it's your fault or not, right? Maybe you make a mistake and you don't stop out. And you should have, and you should have, and you didn't. You just sat there and watched yourself bleed to death. That's a mistake, right? You should have stopped out when you planned on stopping out. If you didn't set a stop, that's a mistake. But what happens if you plan to trade and it just doesn't go like you expected it? You have a plan, you have a stop, the stop gets hit, you lose money. Okay. Did you make a mistake? No. You stepped into the batter's box. You analyzed the situation. You assumed what pitch would probably come. You prepared for any pitch that would come. And then the pitch came, you pulled the trigger, you swung the bat, and you missed. And maybe the next time you step up to the plate, you get in the batter's box, you do the exact same thing over and over and over again. And this time you swing, and boom, you connect. Maybe you get a single. The next at bat, you come up. Your perfect pitch comes up. Boom, you swing, boom, home run. You just never know, right? And that's really where trading is. But when you look at the difference between amateurs and professionals, and it's one thing you can see in sports if you look for it. And I don't watch a ton anymore, but when I do, it's caught my attention because I always make this weird kind of correlation between sports and trading, and I talk about it a lot, but it's not really any different, right? The guys that are pros, they step up, they're calm, they're relaxed, they're focused, and they just walk up to the plate like it's no big deal, right? And they do their thing. They analyze the situation, they wait for the pitch comes, and they either swing or they don't. And if they strike out, they don't beat their bat. Well, sometimes they do, right? They don't have a fit and freak out and start telling themselves over and over again, I'm terrible, I'm an idiot, why did I do that? I bet they do, though. I bet every single one of them does that. When they have something where they may have made a mistake or they just struck out, in their mind, they're replaying it. They're walking back to the dugout, they just struck out, and they're replaying in their mind what they could have done differently. They're looking in the mirror real quick. As they're walking back to the dugout, they look in the mirror and say, okay, what could I have done differently there? And then they get rid of the mirror and they start looking through the windshield again. They go, okay, I got to grab my glove. I got to get out and play defense. I have to shift gears and go out and continue this game, even though I just did something that I wish I didn't. So if you can bounce back, whether it's a mistake or not, because you have to differentiate between, did I make a mistake in this trade or did it just not work out the way I expected? And either way, if you made a mistake, look in the mirror. First of all, determine, did I make a mistake or not? If you didn't, okay, you just swung the bat and you missed. There's a lot of times players, I'm sure, as they get older and more veteran, especially in the pros, they go up there, they swing the bat, and when they strike out, they start walking back to the dugout and they're thinking about what they're doing later that night. They already forgot about that bat because they knew that they didn't do anything wrong. They just went up and did their thing, and this time they missed. They didn't connect. And they're just mentally, they're getting back into the game quicker. And I think that's a really critical skill when it comes to trading, is learning how to bounce back and recognizing that, hey, you're doing nothing more than stepping up to the plate, analyzing the situation, swinging the bat. And if you connect, great. If you don't. Determine if you made a mistake. If you made a mistake, how do you avoid that mistake in the future? How do you mitigate it? If you didn't make a mistake, okay, go back to the dugout, grab your glove, and go play defense. So hopefully that makes sense. I've tried the Erica. It doesn't work for me. I mean, not in the realm of trading. In regular life, yeah. Should prayer, meditation, and faith can help bounce back. I think God's neutral on the market. unfortunately, because I've asked him a lot of times to help me out, but he doesn't seem to. Well, actually, he probably has. Maybe I just didn't see it. I don't know. So yeah, that's a debate. That could be a long debate, but yeah, that's not a bad thing to do that though, just in general in life. So I do that pretty much every day. So swinging for singles and doubles, getting homers once in a while is a happy accident. Exactly. But here's the interest. I'm glad you said that, Trip. Thank you. A lot of people come into the market, and I'm guilty of this at times. I used to be guilty of it a lot. We come in looking for the home run every single at bat, not recognizing that they're pretty rare. For the vast majority of baseball players, homers are extremely rare, right? There's some of the superstars that, hit them quite often. But I would venture to say 98% of baseball players hit one, two, maybe three homers a year on average. I don't even know what the data is, and it doesn't matter to me. But very few of them do. So don't get sucked into this idea that you're going to get homers all the time. That you don't swing for the fences every single time. And that's where the analysis comes in, because sometimes they step up and bunt. Well, if you can't hit a home run when you're bunting, right? But in the situation, the coach calls the play or whatever, or maybe you just know it's a thing to do, or you could, it's just one of those things where sometimes you switch it up and you have to do something different. And all you're looking for is a little tiny dribble off the thing. You don't want to hit a home run for whatever reason, which doesn't make sense to me in the market. You'd want to hit a home run, but you know what I mean? The analysis tells us how to trade. We look at the analysis part. So anyway. Nice. Got a single and a double. But no homer. That's all right. Because you know what? You never know when the homers are coming. You just have to swing the bat, right? And that's the part that a lot of people struggle with, is a lot of people are stuck in the dugout. And they're too scared to get out of the dugout and step into the batter's box and even swing the bat, which is a legitimate fear. And that's one thing we have to deal with regard to trading, right? Is dealing with our fear. You're going to be scared. And if you set up your trades and you structure them properly, then you shouldn't be afraid of anything. Because the reality is you should have a plan that says, here's where I'm getting out if it goes against me. Here's where my target is. Based on those two data points, here's where I can get in and have the odds on my side. And if I have the odds on my side, there's nothing to fear. And then I just follow this plan. And if you follow that plan, things should work out just fine. And they typically will in the long term, right? You're going to have short-term things. But getting back to it, the hardest part is the mental side. Grabbing. Let's shift gears now. Any questions on any of that? Clear as mud. Oops, that's not what I wanted. So what I want to do, we're going to spend the rest of the time looking at charts, as I usually like to do. Is what I'd prefer to do. And I just realized this morning, I was like, oops. I was planning on keeping. So I don't know how many of you have Omega charts, but this is an awesome tool. And I've done some things to hopefully improve the weekly whispers this year, both weekly whispers and pattern of the week. Because patterns in flash once a week, I give out a pattern. I give out a trading candidate, kind of like the one actually. Well, here, you guys want a preview? Free preview. So there's just one for this week. If you already have patterns in the flash, this is the pattern of the week. And it's not really working out at this point. Looking for it to break north, right? We've got a kind of a pennant. It's not quite a textbook pennant. It's kind of a symmetrical triangle. It's kind of in between the two, actually. But at this point, it's not working out. If it breaks north, then we might look at trading it. But this is one that if you have patterns in flash, you'll get an email sometime this morning saying your video's been uploaded. There's I think it's a 5 or 7 minute video where I just highlight anyone. And usually there's 2 or 3. So it's not necessarily a pattern of the week. That's what it started out as. But then I'd find multiple patterns. And I just put extras in there. So freebies. But this is the weekly whispers list. And so I've got 2 different accounts. And you'll notice their exact numbers. How do I determine the pattern of the week? No. Oh, you know what? Actually, I guess I'll take it a little deeper than I was thinking. I was just going to say I find patterns. Like, I don't want to come across as a smart aleck, but I look for a pattern, right? But that's essentially what I do. So if I know, that's why I was like, if I say that like that, it's going to sound like I'm being a smart aleck, and I'm not trying to be. Um, but I'll take it a little deeper than what you're asking, I think. Um, so this is my watch list, right? I have one filter. It's called swing trade. That's what I'm looking for here. There's 335 symbols, and I will literally just sit here and look through each of these. And this is one of the beauties of Omega charts, right? You can flip through the charts very quickly and easily. And actually, this is on streaming mode right now, so it's a little bit slower than normal. But I flipped over at about this pace, and I just look for patterns. There was one right there. There's a double top, but it's a little too far. So I'm just looking for a pattern. I literally go through, I know somebody 335 symbols. That's a lot. There's an inverted head and shoulders. But once you've trained your eyes to see them on the right side of the chart, then it's not challenging. And it takes 10, maybe 15 minutes to get through this if I'm going at a pace like this. And it's just a matter of when there's something that shows up. I mean, there's kind of the beginnings of a head and shoulders. So I'll hit the space bar. You notice a little check mark goes in there. If I hit the space bar, check mark. So I just sit here with my right finger on the down arrow and left thumb on the space bar. And I flip through looking for patterns. And that's it. And then the ones that I find, I go hit save, put it into a watch list. Right. If I hit save, I can create a new list, or I can put it into a list I already have. So I just create a list for whatever date. I do this once a week. I used to do it every day. It's just too intense. It takes too much time. And the reality is the patterns don't change that quickly. So I go do this once a week, create a list, and then that list shows up in here. And there's the pattern of the week list. And then here's the weekly whispers list for January 4th, yesterday. My brother's 50th. He's an old man now. Whoops, I shouldn't have said that out loud, huh? So that's to answer your question, that is essentially, that's what I do. Once a week, I go look for candidates, and then these are the only ones I'm going to watch. And usually I have 20 to 30. The last several weeks, because of this parabolic move we've had in the market, there's only been, I think, 12 we had a couple weeks ago, 14, 15 for the last 3 or 4 weeks. But it'll get back to the 20 or 30 range here soon. So every single week, there's 20 or 30 candidates, and that's all I watch. And that's all I'm looking to trade. And that's one of the things I love about this system is that I can put it in here and it will track everything. I'll show you the data here in a minute, but I've got new accounts set up for 2024. And this is one of the downsides of this system. And some of you are looking at it going, $1 million. While I love Omega charts, I've been using it for the better part of, I've been coming up on 24 years doing this, which is crazy to think, but I think it was a year in that I started using this. I switched from maybe 2 years, switched from the other one we were using to this one. And I've pretty much been using it ever since. And it's crazy what you learn after using something for 20 years, because I learned at the end of 22, just before last year, just before we started Weekly Whispers, that there's the practice platform in here, which some of you might know. I think it's, Replay History, which I knew about years ago, and I've used it, and it's fun. And if you're not familiar with it, what it does, you can go back to any time. You can pick a stock. You can have it randomly picked from whatever you want, and it will show you a chart back in history, wherever you started at. And then you can move forward one day at a time, and you can buy and sell the stock. So you can practice moving forward one day at a time and see the results within seconds, right? Or minutes, however long it takes you. So you can go do your analysis, draw your lines, do this, set up a plan, buy and sell the stock, right? With these little buy and sell buttons up here. So it's really cool. You can go back and get a year's worth of practice in an hour. But I found out at the end of 22 that this same thing applies to, you can set up these practice accounts in here. And actually, it'll track the data the same way. If you go here to reports, and of course, there's nothing in here yet, nothing's triggered. No reports to show, okay? But I've got the ones downloaded from 2023, and I meant to leave them up here so I could show them, but the challenge to this, and this is one of the downsides of this platform, and I asked the tech support team of the developers of this about options, because they do have option quotes in here, and I've tried to place trades with options in this account, but it doesn't work. I don't know why, and he came back and he said, I'm not 100% certain. He's supposed to email me back. He's supposed to be trying to figure it out. They don't have options data, or it's not connected to this practice thing, something to do with the data. So it's a little bit frustrating on the one hand, because it's not as realistic as I want it. So in order to mimic that, because the hard part with this is if you're trading a stock, right, $161 stock, you might pay $10 or $12 for an option, $15 for an option on this, which is a tenth of the size. And generally speaking, with options, you get about a 10 to 1 leverage, right? So if a stock moves 1%, generally speaking, your option is going to move about 10%. So 5% move in the stock equates to about a 50% move in the option. So there's essentially 10 to 1 leverage when you're utilizing options, which is what they're for, right? That's why we love them, is because they give us leverage. So you can take a little move in a stock and create a big rate of return. But trying to translate that into this system and get a realistic trading, you have to create an account that's 10 times the size of what it would normally be. So the Weekly Whispers account, it's $1 million. It's designed to mimic a $100,000 options account. So I have a rule for myself that I won't put more than 10% in any one trade. That's my max. So if you've got a $100,000 account, the most I can put into a trade is 10,000 in an option trade, right? So in this $1 million account, that 10% is 100,000, which is the same as $10,000 for an option trade. So essentially, I had to create a 10 times larger cash account for this practice platform than I would in real life. The pattern of the week is supposed to be a $10,000 account, but I have to put 100 in here to make it realistic, if that makes sense. So trying to create as realistic without having the ability to actually trade options. Now this year I'm actually implementing, I'm going to start trading in TOS, my practice platform I set up. It takes a lot of extra time. It's duplication, which I don't like. It's one of the reasons I love this system, because it pulls the data down. I don't have to do a bunch of work to keep data. It does it for me. So, and you can see I've got, well, CPRT. I don't know if it hit yet or not. This is one I just put in this morning because it was close to the entry point. And this is the beauty. You can put an order in. So I've got an order sitting out there for this particular stop. If it triggers that 4630, which I put it in after it already hit it. So it hasn't hit it yet. In fact, it's you can see this is streaming, but it's not necessarily real time. It shows right here 9:17. It's about 15 minutes delayed. But I'm not worried about it. It's still going to trigger it, especially if I have it sitting out there. So if it hits 4630, this one's going to sell short just a couple hundred shares. But here's where I said I was going to leave that up there, but I forgot this morning and deleted it. So actually, let's go there. So this is the data that you can pull from this system. I wish there was something there to, I can't even get the reports open on this side, but it still looks the same here. So here's a summary of all trades. This is the pattern of the week. So this is based on a theoretical, right, practice $10,000 account. 67% for the year. This winning percentage is not super accurate. It's close. This is one of the other challenges, right? And there's very few, I don't know that there's any, I haven't found a perfect system out there yet. But the challenge with this, number one, is that we can't do options in it. So we have to mimic it as best we can. So that's the part that I don't love, but we just work with it, right? You just deal with it. This one here is the reason it's not 100% accurate is because if you get into a trade and then you sell out in 2 or 3 or 4 chunks, each one of those is counted as a win. So let's say you go in and buy 300 shares or 3 contracts and you sell off one, and then you sell off another, and you sell off a third one. All 3 of those are counted as wins. So that goes into the winning percentages. Even though it was technically one trade with 1 win, it records 3 wins. So that number is higher than it realistically is. And on the Weekly Whispers one, I did it. This is the data for that account from this is last year's data, right? So now we're looking at a rearview mirror real quick, and then we'll go back and look in the windshield. So this one's 56%. I did go take a chunk of, I think it was a week or two's time, and I looked back at the trades and how many of them scaled out with profits, and figured this was about between 15 and 20% off high. Because again, you get into one trade and you sell off in chunks, each of those is recorded as a win. And I took a couple weeks worth of data and I looked at the ones that were there and how they were sold off in chunks. And if you actually calculated it based on one trade, one win or one loss versus multiple wins, it's actually closer to about 40%. Which is awesome, because the reality is a lot of people come to the market, and some of you maybe have heard this, is that, or you believe this, and I used to when I started. I got to be right more than half the time. You got to make more money on, you have to have more winners than losers to make profit, right? And that's not true at all, not even close. Because if you have one giant win, you make $10,000 and you lose $500 on 10 trades, you're only 90% or 10%, 11%, whatever it is. You have one trade out of 10, you make 10 grand on. You have 5 other ones, you lose $500. You've lost 45, you made 10 grand. You're up $5,500 and you're only right 10% of the time. So all you need is that occasional home run. And that's essentially how things will play out. So this is mimicking a $100,000 count. So that was about 122% over the year, over 2023, with about a 40 to 45% accuracy rate. So more than double. Not too shabby. But here's the tricky part: is it can be, if you trade directionally like I do, if you're doing spreads or non-directional types of trading, then it's going to be different. My style of trading is I'm going long, calls or puts. That's 99.9% of my trading. I occasionally will do a spread, but it's pretty rare. But with that comes volatility, right? Especially if the market's wonky like it was last year. And ultimately, everything turned out good. But this is the equity curve for the Weekly Whispers account, right? You can see, and I wish it would do it by month, but it does it by trade numbers. And you can see, and 700 trades is a lot. So it's very active. There's sometimes 2 or 3 trigger in a week, sometimes 5 or 10 do. It's usually on average about 4 or 5 that trigger. But you can see went up a little bit, got up a little bit. There's that zero line, right? And then something happened, and I don't remember what it was, but gave all the profits back. Rallied back up, which is no fun, right? And this is the mental part of the game, is overcoming this. You go, okay, woo! And this is where a lot of people start to doubt themselves, and they question, they stop swinging the bat. They don't even want to get out of the dugout anymore, which is understandable. Been through those. It's frustrating when you give everything back that you had a nice, healthy profit, 25, 30 grand. And then build it back over the next 100 trades and actually go up higher, get up to 50. And then I don't remember what happened here, but gave it all back again. It was like, it's frustrating. The question is, can you bounce back? You strike out. Maybe you have a series of strikeouts. Maybe the whole game you have 5 at-bats and every single one you strike out. It's rare, right, for the professionals to do that, but I'm sure they do. It's not uncommon not to have a hit at all in the game, not an official hit. But it happens, right? You have good streaks, you have bad streaks. So here's where things were not going well. And then all of a sudden things turned around and it went from a bad streak to a really good streak. So this is, I do vaguely remember this. I remember when all 4 markets had Head and Shoulders, and I loaded up the truck. That's why this happened right here. So, and the reality is that's all it takes. Like I said, it doesn't take that many. In fact, where did that go? And this is what I like about this, is you can dig into here and look at a lot of different data, which will give you some insight into your trading. So this is the monthly history report for last year for this account. And you can see right here, the profit column. You look down, and this is the volatility that comes with swing trading, directional trading, right? If you like a more steady type of thing, maybe spreads, covered calls, non-directional type of strategies might be better if you want that kind of steady, slow-paced growth. If you like the wild, crazy, volatile stuff, this might be for you. But here's the reality of trading: is sometimes you have good months, sometimes you have bad months. I mean, January was 4,200, February 900. And you can see the number of trades, the win percentage. It's all tracked over here. The win average, win loss, average trade. You can see there's lots of data here, so you can kind of dig into it and start to see, when you look in the mirror, the little mirror, right? Actually, you should get a big mirror out when you're looking at this, right? Like, what are you doing right? What are you doing wrong? Are you doing anything right or wrong? Is there something you can improve? Is there somewhere you can get more of an edge? But the interesting part, when I started looking at this, I went, wow, look at September, which is about the time that Head and Shoulders showed up on all 4 major markets. And it looked almost exactly the same as we had in 08, right before the 08 crash. Hence the reason I backed up the truck and loaded up as much as possible. And 82,000 out of 100 was 122 for the year. That's 2/3, essentially. 2/3 of the profit came in 1 month for the whole year, which is fairly typical for directional type of trading. if you're trading fairly aggressive, if you're trading directionally, that is not unusual. Here's where I think it's really interesting is that most of that actually came within 1 week. So here's a weekly list. You can come look at this. And yeah, there's the week of September 30th, 72,000, which is what, 55, 60% of the annual came in 1 week. And this is based on closing out the trade, right? It only banks the profit when you close the trade. So on the week of September 30th, you can see that, did 62 trades. Win rate was 88% that week. Right? The week before was 11 at 90%. So, I mean, there's 83,000 in the last 2 weeks of September. That's two-thirds of the profit for the year came in 2 weeks. So, yeah, that is fairly normal if you trade like this, if you trade directionally. So some people don't like the swings. It doesn't bother me because I know in the end, the odds are in my favor anyway. So, I know, I wish, let me grab these questions real quick. What percentage do I use for stops? I don't put a stop based on percentage, Tom. I'll show you here in a minute. Actually, let me grab these other ones. You can kind of see what's on the screen, but I'll show you exactly how I set up trades and do it. What are my thoughts short term on the spiders? Another good question. Let me get to that in a minute too. Actually, maybe I'll just use that as an example. How do you access the reports? Go up here, right here at the top. You hit reports, and yeah, there's nothing. No trades have been done in here, so I don't necessarily want to trigger one just because. Well, here, let me show you this. Okay, we got a little bit of time left. I don't watch the clock, and all of a sudden it's like 5 minutes left. I realize, like, oh no, I don't have much time. Surprised Brenda didn't ask. You beat her to the punch. So here's the replay history, right? And this is a beautiful thing. If you don't have Omega charts, get it just for this. So replay mode, you can do streaming replay. I don't think I've ever done that. I don't need to. I'm just looking to practice my skills, right? Select a random symbol from the S&P 500. We can pick the start date, right? You can pick whatever date you want. I'll just leave it there. It's January of 2010. Auto adjust. So hit start replay. I'm gonna do this so you can see how the reports come out because it'll allow you to do the same thing here. Which actually this is nice because you can go back and do it in a compressed time frame, right? So you can go do all your analysis. You can draw all your lines. I'm just gonna bust through this real quick. Go to weekly. If you need to do weekly, do it first because once you start the replays, it won't let you go to weekly for some reason. Like every software, there's always little glitches here and there that can be irritating, but you just have to learn to deal with them. Such as life. Some minor adjustments here. Well, actually, anybody see that pattern? There is a pattern there. What just happened there? It was split? Yeah, it's okay. Is that it? Oh, really? Looks like it's just getting ready to split, I think. I don't know. Okay. Oh, it's not so clear on with a little bit of high here. Some of y'all might have seen that. It's not textbook, but head and shoulders, right? There's a little bit, this head's a little bit higher. On a closing basis, they're pretty close to the same. It's a tiny bit higher. So it's not textbook head and shoulders because you want the head to be a decent amount higher. It doesn't have to be necessarily, but so yeah, it's a little bit of a stretch for me to consider this a head and shoulders, but we've got a peak here. So let's see if, actually, I think, yeah, that should work here. Okay. So here's what I do, Tom, to go back to your question. I don't use percentage stops. I'm basically analyzing the chart saying, what do I think is going to happen next? And I'm just doing this briefly just for time's sake because we don't have a lot left. So we got a bearish pattern, right, where the bulls, it's not super bearish, but the bulls had control here, right? Bears come in, beat them down. The bulls come back saying, nope, we're taking it. They run it back up here and they make a new high, barely, which indicates that the bulls are not that strong anyway, right? So the fact that they don't have a significantly higher high is a bearish sign. So maybe this is better than I was thinking. And they dance around here for a couple of weeks, They fight back and forth, and the Bears come back in and take control. Right? Tug of war. Sometimes I think of it like that. It's a tug of war between the Bulls and the Bears. Right? And the Bears are winning here. And the Bulls come back in and say, nope, we're going to take it back up here. And the Bulls come back and they tug them back and get them almost in the pit. And now we're sitting here going, okay, who's going to win this fight? Well, it does to a certain degree look like the Bears are going to win at this point because they've pushed it back down a little bit from this resistance level. And maybe that should be a little bit higher, but I went back historically and got some more. So conceptually, put them in a headlock. You don't like Bears. I love Bears. The Bears. So I'm looking at this saying, okay, there's a resistance level. Here's the recent resistance level. The first thing is, in fact, I think I actually have that up. If not, I will find it. I do. So the first thing I do is, where would I put my stop? If I'm going to buy puts on this or go short the stock, whatever your trading style is, right? Or do a bear call spread. If you're doing a bearish trade, at what point, the question always is, okay, if it breaks north, if I'm wrong, if I step up into the batter's box and I analyze the situation and say, okay, here's the pitch that I think is coming. I think a fastball is coming. And then a curveball comes and I swing and I miss because I wasn't prepared for it and I didn't adapt properly. Okay. Your analysis wasn't bad because it would have made sense for a fastball to come at that point. And obviously, mentally, the pitcher tricked you. So your analysis is one thing, but what if you're wrong? Where are you going to get out? And I'm going to go slightly above. I think this is the right one. I haven't used these for a while. I'm going to go slightly above the resistance level at a point where I think that if it hits that, I'm wrong. It's not going to stop. It's not going to come back down and drive again and go in my favor, right? So in this case, I'm looking for this thing to come back down here to about this 50.5, 51 level. So that's my analysis tells me that's probably what's going to happen here. Possibly going to happen, I should say. Don't even know if it's probable. So I look behind. So I don't use a percentage. I use the support or resistance level and say, at what point am I wrong? At what point do I no longer have faith that this thing's going to do what I think it's going to do? However you want to phrase that in your mind. So I'll put a stop back there and then, okay, where's the target at? Well, I put it right there, maybe just shy of that. So there's a target. So I'm looking at it saying, bearish to here. If it breaks above here, I don't want to be there anymore. I'll take my hit and move on. Now all I have to do is punch it in a risk reward calculator if you want to do it manually, which is what I used to do until last year. And then I discovered the tool I'll show you here in a minute, 5102. Now all it does is spit out an entry point at 54.96, which gives me a 3-to-1 risk reward, right? So I have a buck 31. And this is based on the stock price. So if you're trading an option, you just have to adapt it, right? If you got a delta of 70, it's going to cost you about $1. The upside is almost $4. So I've got a buck 31 of risk, $3.94 of potential profit. The beauty of this, if you haven't seen me do the risk reward stuff, which I don't really have time today, but well, there's an example down there, actually. I guess we could, huh? Mathematically, and when I showed you the data, right, I said I estimated that I was about 40% accurate, which that's all it takes. You realistically only need to be, if you use a 3-to-1 risk reward ratio and you stick to it every time, you don't deviate from it and take bigger losses than you're supposed to, then you only have to be right 25 to 30% of the time. And some of you are like, that doesn't make any sense. Well, if you trade this exact same trade 4 different times, you do 4 different trades, exactly the same one, you lose on 3 of them, you lose a buck 31, how much have you lost? $3.94. So if you win on 1 of them, you make $3.94. So you swing the bat 4 times, you win once, you get 1 hit, and 3 strikeouts, you're still break even. You're only 1 for 4. You got a 250 batting average, and you break even. That's the beauty of this. You don't have to be right more than half the time. All you have to do is make the winners bigger than your losers. Hence the reason there's the old saying, right? Cut your losers short and let your winners run. That's one of the beauties of this system is that the practice system here, the one thing I learned when I went back and did this, I did like 2 years worth of data at once, and I've done it several times, and it's a great place to practice. The beauty is that you can go back, and what I realized is that the trades that I was profitable on in this play system, I held on to longer than the ones that stopped out. I would get stopped out within 1 to 3 days. But the profitable trades were 13 or 14 days long. It's been a while since I did it, so I don't remember. But I all of a sudden went, wait a minute, okay. Because most of my funded trades that I was doing, I was getting out too early and not letting it continue to run. And I realized by doing this, I need to give it a little more time. You still have to adjust the trade. And if it's moving in your favor, you want to move your stops, maybe you scale out. There's lots of different ways to manage the trade. But what I learned about myself was that I needed to hold on longer and let them play out and get there, because I was pulling my profits too early, which isn't necessarily a good thing, right? I mean, our goal is to maximize profit. So hopefully that answered your question, Tom. I'm going to either slightly above or slightly below a support or resistance level. So I don't use a percentage. You can, if that works for you, use it. I mean, there's a million different ways to trade. I don't tell people you have to do it this way, you have to do it that way. Figure out what works for you and utilize it. You know, if percentages work better for you, if you're buying stock, it just depends on your strategy and what your longer term goals are. So this is just my style. This is the way I do things. So, but there's this cool little tool here. It's an advanced risk reward that I discovered last year. And I can see if I can get it. Oh, I got it backwards. The beauty is you can do this, and now I can just go in here and say, okay, I'm going to put my stop where I want it about. I just draw up there where my stop is, slightly above. I think it was, yeah, that's close enough. And then I can adjust this, get a little 2 arrow. Come on, where'd it go? I think, maybe not. Oh yeah, that worked. So then I can adjust this to there, and this automatically calculates the 3 to 1 for me. It's all done inside there. So it's all, you have to adjust it a little bit, but I adjusted it so it looks the way I want it to, but got $4 upside, $1 risk, which makes it a 3 to 1. So it automatically calculates the stop and the entry. So I don't have to use the calculator anymore. There is the calculator inside Patterns of Flash if you don't have Omega charts, so you can still use that. But so there's the entry point. I'm going to adjust this because we're doing an example. I'll put the stop just slightly. It's still below there. All right. I want to show you, because we only have 6 or 7 minutes. I want to show you how this system works exactly and how you can use it. And I'm trying to get to the report thing. So let's say here's our trading plan, which I've adjusted just for example's sake. So I come up and hit sell. And here's the dialog box you'll get. It works the same in the live thing. There's a few more options here. But we're going to sell 10%. That'd be 54 grand, 5,400 if it was an options trade. So same thing. Stop at or below. And you call me ADD. So we put it at or below 54.22. And we hit place order. It puts an order right there. And now we can go up here to these buttons, and we can either hit play and have it go automatically. I usually just, if I'm actually practicing, I tick it forward one at a time. I don't know if you can see that or not. Let me get it real big. It should bring up the open. Oops. Okay, I guess it didn't. So you click once, it'll show you the open of the next day. So there's the open of the next day. And then it will show the rest of the candle. Okay, so there. So we didn't get in. So right now we're just sit and wait and see what happens. This thing might break north. Nope, not yet. Still recognize that resistance. So you see this, we're clicking forward 3 days. There's 3, 4 days, 5 days. You can go 1 day at a time. And what now? Well, there we go. When that pops up, that means it's going to hit. So profit target stop loss. We're going to put our stop loss. How many points is it? 55.93. That's a buck. I'll just put it there, and I can adjust it. That's the beauty of it. It hits there. Okay. I got close. Here's the beauty. Okay. So there's our entry point, right? And it tells you up here, open equity, 500. We're short 1,000. It's open 570 bucks of profit. So you're up 57 cents. The beauty is this stop thing, you can actually move around. You can go like this and it'll automatically move it. So you can put it wherever you want to. In fact, I'll leave it there for now. And now you can just go forward and see what happens. Okay. So now here, the question becomes, what do you do now? Now you reevaluate the trade, right? Now you're, how do they call strike? Is it 0-2? The pitcher's throwing 2 balls, right? You're ahead of the pitcher. Whatever you want to call it. Now I'm going to move my stop. I'm going to drag this thing down to here, put it just above the high of this day in case it comes up. And there's a little tiny window open there. It might try to fill it. I'll put it just above there, which will protect. It won't necessarily protect profits, but it'll certainly minimize my loss considering it's already moving in my favor. And you can see the volume is spiking, so that's a good momentum indication, right? So let's see. All right, there's a little piercing pattern. I'm going to move this down even further. In fact, I'm going to put it just to break even. Mainly did this just to see the reports, but all right, there we go. Where's it open the next day? All right, so we just gapped down the next morning. I'm going to move this down here and keep it just above the high of that candle. And if it stops me out, that's fine. Okay, now we just got a hammer. I'm going to pull it down to about the halfway mark of that candle. If it stops me out, I'm good. I got profit. Don't care. Oh, lovely. All right, definitely going to pull this down to about just above the halfway point of that candle. We got a little support looks like coming in there. And there it is, it stopped out. And now at the end of the day, you're like, I got stopped out. I can't believe it. I should have stayed in. I should have left the stop back here. Would have, should have, could have, right? Now, this is another, it's not necessarily a downside. You just have to adapt to it. This one, you can't scale in and scale out. You can't, I kind of figured out a way to a couple months ago. But for time's sake, considering that we're almost out of time here. Plus, I did this just to show the reports, but you can see how pretty awesome it can be. I mean, we literally just had, how many days was that? We started here. That's about a month or so. It looks like 3-4 weeks of time. We just traded in a matter of 5 minutes. So it's a great way to practice. It's a spectacular way to practice. But here is going back to Tom, your other question, the report. So you hit report, right? And inside the practice platform and the other one, it's going to be the same. But here's what it shows you, right? It's the same as, right? If we go to summary all trades, that's what it looks like, right? Same thing there. I don't need that anymore. I'm going to leave it. That's what it is. That's where it's pulled from. So I get your total profit. It'll show you the total amount of trades, your winning percentage, your profit factor. There's a whole bunch of data in here. This is why I love it, because I hate having to manually track data and all that. I just can't stand it. And I don't keep up on it. So this does it for me. I don't have to worry about it. And you can come here long, how many longs. There's a short, monthly history, weekly history, just like some of the ones I showed you. So yeah, that's what I thought too. And the practice platform, like we see here, and you can print it, right? If you want to print this stuff, that's all I did with all the data. I just pulled as much as I could here to save it. You can export it. There's a bunch of different things you can do here. But what you can do when you hit quit, you can save these. You can save the results of your game, and then you can track, you can put the date, that's the default date, but and then it will show you a list of your trades, and you can go back and see how your sessions work. But this system right here works exactly the same, except that now you're essentially doing it in real time. So you have to wait for the trades. Like this CPRT, I just did the same thing. You can hit sell short, same system here. You can set up multiple accounts. I just do the two. It tells you everything here. You can do a bunch of different stuff down here. And the beauty is that, oh shoot, I don't know if it's probably not there. You can get journals too. And let me show you that really quick, because I know we're almost out of time. I know. We are. Where'd it go? That's not what I wanted. Oh, journals. So the beauty is you can go in and I went and pulled every single day. So this is what it looks like inside the system. Okay, that's not a good pick. I don't know what day is, but this is what it does. So when you enter that order, you can have it save a snapshot of the chart when you place the order. And here it tells you the time, what you did, and you can you can journal everything. You can write a bunch of stuff. And that's one thing I'm doing this year different, is that I'm putting more data in here, because sometimes I come in here and look at it and you're like, I don't know what happened there. There's a Head and Shoulders on Netflix. But you can see it saves all the data for you. So yeah, I agree, Tom. It is amazing. It's awesome. That's why I started using it last year. I just wish that it would work for options, but it doesn't, unfortunately. So, but this is still a good way to track your results, right? And how you're actually doing, and to see the trades and keep them going. So does that make sense? All right. You ready, Brenda? Oops. You're not the only one, but overall look on the spiders is going to be the same as it is with the SPX. I mean, my macro view is that I'm still bearish on the market, even though we've had a crazy run the last 2 or 3 months. The market, as far as I'm concerned, this run is based purely on emotion of the Fed pivoting, right? The last 2 or 3 cycles we've had, big major market cycles, when the Fed pivots and stops raising rates, or when they start lowering rates, then the market has pivoted and rallied. And so you've got this huge community of people, if you will, that are waiting and watching for the Fed to pivot. In the last year and a half, everybody's been laser focused on the Fed and what he's doing, what they're doing, raising rates, lowering rates. And so everybody's watching for the pivot. And you've got a whole new group of these younger traders in, and they learn a little bit about the market. They're like, oh, this is what it does. This is what it does. And so most of it's institutional money usually, but there's no doubt that some of this is driven by some of those newbies that I don't want to say they don't understand, because that has been accurate the last several cycles, that when the Fed stops raising rates or when they start lowering rates, the market does take off. So it's accurate, but it's not necessarily always true. The macro data, the overall picture of the economy is not, there's some good and there's some bad. And I think there's more bad than there is good. And I think we're in for a lot more hurt than we are for bullishness. So my macro perspective is that this market is overdone. I think we're at a stage of irrational exuberance, possibly just as bad. And in fact, I heard something a week or two ago about the NASDAQ. I can't remember exactly what it was, so don't quote me on this, but it was, the NASDAQ was percentage-wise up. I don't know if it was the whole year or just the last 2 or 3 months. It's run more than it did, or the same amount as it did in 1999. So we had a similar performance year in the NASDAQ to 1999, which you all know what happened after 1999, right? That's when I started in 2000, right at the peak of the market. So I got baptism by fire real quick. It was like, oh, you're going to buy calls? Yeah, that's not going to work out. But that's all all my coaches did was buy calls, because you buy the dip. And for several years, all you had to do was buy the dip. And that's where the old saying, don't confuse brains for a bull market. And a lot of these newbies, I see a bunch of them on Facebook, and they think they're geniuses because they've made money this year or in the last few months. And eventually the tide turns. And if you're not prepared for it and you don't know how to adjust, then you're going to lose everything. I've seen it many times. I've done it myself. So most traders have. So it's not abnormal. It's not unusual. It's very normal. Whoop. There's a block trade on gold. So yeah, I don't, this run to me is just absolutely nuts. And again, I think it's an overly emotional run. When you look back historically, there's hard to find another period, and this is going back to 2017. There's hard to find other periods where we've had this steep and this fast of a run. There's some. I mean, here's the COVID pandemic, and this is another one that I think was wildly irrational. Hence the reason we had this major pullback in 22. But we've rallied back up, and who knows where it's going, but we're at the highs. Whether or not they stay remains to be seen. I think, and I've been saying this for a couple of years, I actually think we might be in this cycle where I don't think, we don't have that. Holy cow, sorry, Lee. Give me a minute. So here's the SPX, same thing, basically, right? It's weekly. Oh, we got to get. So where is my triangle? There's this period from like the early 60s, mid 60s, all the way up to basically 1980. And it's funny, if you actually, this is the entire history, right? We're going all the way back to the 20s of the SPX. And you can do the same thing on the Dow, and it looks similar. We have these periods that, every year or two the market rallies, and it's kind of a channel, essentially. There's actually 16-year periods. If you take out the Great Depression, you take from the very bottom to here, that's about 16 years or so. Then you have 16 years of rally. You have about 16 years of sideways, and then approximately 16 years of upward from 1980 up to 2000. That's 20 years. Okay, 15 to 20, somewhere in there, but most of them are about 16, where you get a big rally. And then there's the peak in 2000. We really didn't break out of that till 2013. So there's 12 or 13, 14 years. And then we've had a rally. So I wouldn't be surprised to see this kind of behavior in the market over the next several years, where we rally up, then we drop off over, a 1 or 2 year period. This is kind of what I'm expecting. It's one of the reasons, one of the advantages of trading short term is that big picture doesn't necessarily matter. In the short term, we're just looking for short-term moves. So, but I think it's good to keep a macro picture and understand what you think the bigger market's going to do. I think the data is going to eventually crack. I think this market is eventually going to come to its senses. Earnings season starts in 5 or 6 days. JPM comes out on the 11th, I think I saw. So what companies say about earnings and what they say about the economy and what they think, I think is going to be a big driver in the next 2 or 3 weeks when the big banks come out starting next week. So, and we'll see. I mean, it's always hard to say. It's always a 50-50 crapshoot. So we just do our analysis. We create our plans. Just like this. And these are all the ones on the list this week. That one you can't really see, but there's Adobe. Got to plan on that. And these are the ones that the Weekly Whisper subscribers get. Double top, resistance, and there's not a lot this week. Usually there's 20 to 30. The last few weeks has been 12 to 15, I think, because of the parabolic move in the market. There's a double top in Costco. CPRT, a descending triangle. We were kind of looking at that. Fifth Third Bank. This was actually breaking north today, so that would negate the trade at this point, unless it drops off, but you can see they have earnings coming up. There's another one that looks kind of similar, double top, kind of, but it's not playing out yet. IBM. There you go, Trip. Not really a head and shoulders, but actually I need to, you know what? I'll do this right now. Okay. I needed to have this in there anyway. Nope, we're just going to do, not that. We'll just do 300. So this is how I do it. It's close to that entry point, 158.84. So this is what I do with the Weekly Whisper. It's going to sell 300, which isn't a ton. It's half a position. It's about 45 grand. So I can go up to 100 grand, right? To be the equivalent of 10,000 in an options trade. That's 10% of the account. I'm not going to max it out because I'm not that confident in this move. The volume's not that great. It's kind of a mediocre look. So I'm going to do a small, about a half position based on the analysis. So I'm going to leave that at cautious. What do I see? Miniature. Nope. Oh, come on. Miniature head and shoulders. It's a stretch, but not strong half position. So these will be recorded. So then I come down and hit attach chart image. So now this is my journal. So that journal I showed you, the PDF, this is what will be in there. Those logs. It will attach a picture. It will take a snapshot of that right there, log it in that journal, and done. And now you can see there's an order sitting up here for IBM to sell 300 at 158.84. A sell stop. So if it hits that, it's going to mimic buying a put or shorting the stock. If you're shorting stock, then it's the same thing, right? But essentially that's like buying a put. IBM and an M for murder, a double top. Yeah, I definitely wouldn't consider it a head and shoulders. I'd consider it more of a double top. It's kind of a mix between the two. It's a head and shoulders doesn't happen over 2 or 3 days. It's typically a 2 or 3 month process. But is conceptually, did the Bulls have control here? Yes. They were on a massive run. Did the Bulls have control here? Yes. Did they lose control here? Yes. Have the Bears come back in and pushed them down? Yes. In other words, it looks like at this point that the Bears are taking over. The Bears are starting to win. So I'm willing to swing the bat, half a bat, to see if the Bears are actually going to win this thing. And so I've got $9 of potential, which means I have exactly $3 of risk. So if it triggers and it tanks and the Bears take control and they win, I'm making $9 on 300 shares, $9. If you're doing an option, 3 contracts, you'd probably make $5 a contract. It's going to be healthy. So yeah, this is not really a textbook pattern. And there's not lots of really good patterns out right now just because of the market conditions. So there's a little ascending triangle, McDonald's double top. That one's too late though, unfortunately. And then that's essentially all I do. I look once a week, look for patterns. I set up a trading plan, and those are all I watch for the week. I put trades on them if it looks like it's about to hit, or if I think it might hit, I'll throw the orders in just like I did with the IBM and just let it do its thing. And if it goes in triggers, I'll go put the stop in and let it do its thing. And if I have the odds on my side, 3 to 1, I only have to be right 27, 28, 29% of the time. And long term, I'm good. So it's not rocket surgery. So anyway, Brenda, it's gonna be quick. See, she's coming down to say goodbye to you. There's the cues. Not much from a trading perspective. I don't see anything but broadening patterns, which you can see a lot right now. Oh, it's your fault, Brenda. Called her down. She literally just hit the keyboard. I don't know what's going on here. She's sitting here right in front of me, laying on the keyboard. I had to move the keyboard so she's not hitting buttons. She's trying to trade for me. I know she's a little crazy. I was done. Maybe she's telling me it's time. Did Lee call you? Anyway, so a broadening pattern is typically an indication of a top. That's one reason there's lots of these going on right now. They're just really hard to trade, right? Because by the time it gets all the way down here, it's dropped so far. So it's not necessarily something you can use to trade, but generally speaking, this is an indication of an increase in volatility. And when it comes at a top, especially after a big run, that's usually the indication the run's over. But these have been coming out for the last few months on a lot of different stocks, even the overall market. So this is more of a macro type of pattern. Short term, there's not much. I mean, it's kind of, I don't see any real legitimate pattern that would make me want to trade this thing. And even there, you got a little gravestone doji, another one today, and the market's selling off right now. At least it has been for the last hour or so. Maybe that's my fault for listening. Just kidding. So anyway, so yeah, I don't see it. I can see the market rallying back up. You know, people coming in buying the dip, but overall, I'm still bearish on the market long term. But we'll see how it plays out. I'm just, you know, I'm playing the short term things, just looking for these little moves. That's all I concern myself with. So big picture, I can't do anything about. It is what it is, and how it plays out. I was surprised last year was what it was. Most people were. So anyway, other real quick questions, so I can shut up and Lee can get back to work. Thanks, Erica. You too. All righty. Well, hopefully you've all had a little fun today. I always do. So we will see you. We'll see you all down the road. If you get in Patterns of Flash or Weekly Whispers, send a message in, say hi. And if you have any feedback, any questions, I'm wide open. So awesome. All righty. Y'all have a great day. Have a great week. Happy New Year again. God bless. Bye-bye.